All right. Good evening. Good evening, everyone. Is it loud and clear? Is it loud and clear? Can you hear me well? Good evening. Good evening. All right. All right. All right. So let's quickly introduce ourselves. We are going to make it very fast. Going to take us an hour. You are going to be very fast and prepare for the week. So those who will be going to work needs to prepare, and those who will be trading for the week needs to do their analysis and see whether there's going to be an opportunity tomorrow. All right. So we have kindly introduce yourself and let's move on. So when you join the live stream, you kindly tell us where you are tuning in from. Where are you tuning in from? Where are you tuning in from? You kindly introduce yourself. So you tell me where you are tuning in from. Tell us your name and where you are watching from. Where are you watching from? So Kumasi. So where are you watching from? Kindly introduce yourself. Let's introduce ourselves. So I'm Pakwisi from Ghana. Where are you tuning in from? Joshua from Tichima. Daniel. So we are having Daniel Tetavi from Vota. We are having Isoso. I'm Ankuma Christian from Konongo. You are welcome. Ankuma Christian. You are welcome. Please kindly introduce yourself. Where are you listening from? Are you all from Ghana? Ignatius Akalapi from who? So we're having David from Kumasi. So Enoch from Ghana. Enoch from Ghana. Who else? Who else? All right. So you let's move on. You have Enoch from Ghana. Okay, you've introduced yourself. Who else again? Okay, so let's move on to the webinar. What I have for you today. So purposely, what the live stream was designed to, it is designed for you, for especially those who will be busy during the weekday. So some people don't catch up on the sessions that you've been having during the learning session in the morning. The morning sessions, most people, because of work and other stuffs, they've been busy and they are not able to catch up. So the purpose or the motive, the reason why this weekly webinars were introduced is to help those who don't get time for them to attend the morning sessions. You get it? So those who don't get time to attend the morning sessions, I think this weekly webinar was designed for you to be able to to catch up, or for you to be able to also get advantage of the freestyles that have been given. So that's the sole motive or purpose for the weekly webinars. That's the sole motive for the weekly webinar. So today I want to talk about something that most people have been overlooking. So if you are starting out with trading, so the trading really is demanding. Okay, so it's only for those who are willing it's only for those who are willing to put in the work. A lot of people at the beginning or at the earlier stage are going to lose a lot of money, and they are going to give up. You get it? They are going to give up because they can't keep up with the work ethics that is demanded. So a lot of people are going to be frustrated. They might think, oh, I heard this thing is going to give me a quick money, but how come I'm suffering to make a money and other stuff? It's going to be very tough for some people, because the mindset, their initial mindset is going to be different from the reality. That's how it works. But you see, you need to put in the work for every good things. If you want freedom, before even a country will be able to, those times before you'll be able to get the freedom from your colonized masters, it demands a lot of things before you'll be able to break out from those things. So it's the same thing as an individual. If you want to be free, it's going to be very, very difficult, because the way the system was designed, it was designed to enslave you. It was designed for you to work 9 to 5 for your whole lifetime. You get it? For you are not going to get freedom before you. That's how the system was designed by the leaders. So if you want to break out from that freedom, it's going to demand a lot from you for you to make your own decisions in the day and every stuff. It's going to demand a lot of things. But some people can't keep up. You get it? Some people can't keep up, and they will give up on it easily. You get it? They will give up on things easily. So the sole purpose today, we are going to talk about how to be able to use candles to make decisions. So most of the times, candles are what we use to make decision in the forex market. You get it? Most retail traders will use candlesticks to make decision, but we are having different ways. There are different types of charts. Okay, there are different types of charts that you can use to make decision in the forex market, but the most used ones, as we the retail traders. Okay, so retail traders is those who trade the derivative, the derived or the underlying financial assets. Okay, so we have retail traders. Retail traders simply means what? We don't trade the rare currencies. We are not trading the physical currencies. We are what? Trading the underlying assets. We are trading what? the numbers on the screen. Okay, you are trading what is being given from what the sports market. So for you to make decision, most of the times we read the charts for us to make the decision in the forex market. But for you to make decision or for you to read the charts, we are having different types of charts that mostly we use to what to make decision in the forex market. Okay, so we're having different types of charts. We have what the line charts, we have the bar charts, and the candlestick charts. These are the three types of charts that most at times retail forex traders use to make decision. I thought I was the only trader. These are the three types of charts that mostly we use to make decision in the forex market. You get it? We're having different types of charts. So if you want to see the types of charts, so as I'm saying, if you want to see the different types of charts on your trading view, okay, so if you are new here, this is a platform or a software that's mostly we use for our analysis. Okay, sometimes you can use for your trade execution and other stuff. If your broker is what you can link your broker account to this platform, you can use it for trade execution. It's not purposely for what analysis. You can use it for what trade execution. So if you want to see the types of charts, when you click on the drop down arrow here, you'll be seeing the various types of charts. So we are having different, or we are having what numerous types of charts. Okay, so we are having range. So if you click on range, you see what will pop up. You get it? So this is the range. You see what has pop up, and we're having different types. We're having Hikin, Ashi, volume footprints, high volume columns, and what. But the most used ones that we normally use in our decision making is what the three that are what I indicated at the initial stage. We have the line chart, we have the bar chart, and we have the candlestick chart. Okay, these are the main types of charts that most retail traders use in what analysis. So I've already explained what retail. So retail traders are what we trade the underlying financial assets. Okay, so the underlying financial. What I'm trying to say is what we don't trade a physical cash. We are trading what the underlying. We are trading the features of what those financial assets. You get it? That's what we do. We are not trading the physical cash. We are not trading the physical assets. We are trading the underlying assets. So that's what retail traders will do. Okay, so those forex, those exchange rate prices are derived from what the spot market. Okay, or the spot dealers. So they are the market dealers. So they are what those people who trade a physical cash. So the exchange rate is derived from what the spot dealers, the spot market. Those are the people that trade what the physical cash. So the spot dealers are what the financial institutions, the hedge funds, those big institutions. Okay, the financial institutions are the ones that trade what the physical cash. But what we do is what we just trade the underlying assets. So that's what we do. So we're having different types of charts. So the different types of charts for us to what predict or speculate on what the exchange rates. Okay, for us to speculate on the exchange rate is what we normally use the candlestick chart. So for me, I use the candlestick chart and the line chart for my decision making or for my speculation or for my prediction in the forex market. I normally use the candlestick chart for my decision making in the forex market. So you need to understand that those candlesticks that most of the times you use. So as I said, candlesticks are not the only ones that most of the times we use in what making decision in the forex market. I've already showed you the different types of what charts that you can use in your decision making. You get it? It's your reason, your boy. Okay, so we have different types of chart that you can use in your decision making. So we have these types. Okay, so if you are not using it, other one someone who is also using it. But what I use most at times is the candlestick chart and the line chart. You get it? The candlestick chart and the line chart. So when you talk about candlestick, so I'm going to show when you talk about candlestick. Okay, candlestick was it was used by a Japanese trader. Those times it was used by Japanese traders. Okay, so it was used to predict the decision makers it was used to predict the decision making for those who sell commodities and other stuffs. So it was later what it was later taken by the US traders to make decision in the forex market. Okay, so that's why we are normally using the candlesticks to make decision in the forex market. So candlesticks usually what gives us or a visual representation of what is happening in the market or what is about to happen in the market. So if you understand the psychology behind candlestick formation, you'll be able to what predict, or you'll be able to predict what is going to be happening in what in the next minute or in the next hour. If you really understand the psychology behind the formation of candlestick, you get it. If you really understand the psychology behind the formation of candlestick, you'll be able to what predict what will be happening in the forex market. So technical analysis in forestry, candlestick forms an integral part of what technical analysis. uh, Technical analysis. Okay, candlestick really forms an integral part in what technical analysis. So if you are doing your technical analysis and you are not using candlestick, I think it's going to be very difficult at the beginning stage or at the initial stage. So it's always important to apply candlesticks in your decision making. It's always very important to apply candlesticks in your decision making. So we are going to talk about the psychology behind every formation of what a candle. So these candles that you are seeing, the colors, as I said, I've been saying most of the times, the colors that you are seeing over here doesn't matter. What matters is what how they are being formed on the chart. That's the most important thing. How they are being formed on the chart is the most important thing. You get it? So you need to understand the formation of every candle. You need to understand the formation of every candle. So we are going to start with what? We are going to start with how you'll be able to identify a candle. So every candlestick comprises of what? Every candlestick comprises of, for you to see a complete candlestick, it should include the opening, the close, the close, and what? The session top, or the top and the bottom. Okay, the top and the bottom, or the tip of the candle. So candlestick usually includes these things. Okay, so we have the high. So the high is simply what the top, and what the close is the body of where the price close, and the opening. So candlestick comprises of the high, the opening, the close, and the lows. So for you to see a complete candlestick, these things must be included. So if you are not seeing this thing, that means it's not a complete candlesticks. So it usually gives a visual representation of what is going to happening in the market, or it also helps you to determine what has happened in the forex market. You get it? So it's very, very important for you to understand candlestick. So it is made up of parts. So we have the opening, we have the close, we have what? The opening, the close, the highs, and the lows. So those things comprises of what? A complete candlesticks. You get it? Those things comprises of what? A complete candlestick. So the top simply means what? The high. Okay, the top simply means the highs. It's simply the highs and the low. You get it? The highs and the lows. So all these things depict, or all these things what? All these things tells us what? Something. So you need to understand every formation of a candle. Okay, you need to understand the formation of every candle on the chart. So these candles that you are seeing, it's not just something like just for fun. It means something. So if you understand how to read these candlesticks, I think you are going to be making the right decision, or you are going to be making the right choices in the forex market. You get it? You are going to be making the right choices in the forex market. So a candlestick is made up of parts. It consists of different body sizes. So you see how human beings, our behavior is the same thing as the forex market to how it behaves. So in the forex market, it behaves like human behavior. So in human behavior, we are having some common activities that usually we do when we start our day. So when we start our day, no matter where you are living, or no matter where you find yourself, you are going to brush your teeth. You are either going to take in some water. You are going to visit the washroom. Okay, you are going to, sometimes you eat. but no matter what within the day you are going to eat. So the same thing applies to candlesticks. Okay, so the same thing too applies to what the candlesticks. So candlesticks too, the pattern of the candles, what the way the candles are formed on the chart, the way the candles are formed on the chart repeats itself every day. You get it? It repeats itself in the market. The candlestick patterns repeat itself in the forex market every day. So that's why I've been advising people to what, make sure they've mastered a pattern, because the forex market, the patterns or the formation of the candles repeats itself every day in the forex market. So if you understand your pattern, you are going to make a lot of money in the forex market. So the forex market or the pattern, the candlestick pattern is the same thing as what human behaviors. Human behavior are what we are having some common things that we usually what been practicing every day. So you don't need a pastor, or you don't need someone who is able to tell the future to tell you what you are going to be doing tomorrow morning, that you are going to brush your teeth, you are going to visit the nature halls and those things. You don't need a pastor to be telling you this thing. It's the same thing in what candlestick pattern or candlestick formation. Candlestick patterns or candlestick formation to also repeat itself every day. You get it? So we are having, if we are having different types of candlesticks. So we have the bullish candlesticks. So the major ones are the bullish candlesticks and the what? The bearish candlesticks. So for you to be able to identify bullish candlesticks, what you are going to, it's not about the color of the candle. You get it? It's not about the color of the candle. What it is important for you to understand is what the body is. What is important for you to understand is where the candle open and where the candle close. That's the most important thing that is going to help you to differentiate between what a bullish candlestick and a bearish candlestick. So as I said, we're having these two major types of candlestick. We have the bullish candlestick and what the bearish candlesticks. So the bullish candlestick comprises of how you are going to be able to identify a bullish candlestick is what when the opening is what above the what close. Okay, so this is how it's being formed on the chart. So for you to identify or for you to be able to tell this is a bullish candlestick, it's not about the color. The color doesn't matter. So when the candle open, when the open of the candle is above and the close of the candle is what? The close is what? Beneath. Okay, this is what differentiates bearish candlestick from what? A bullish candlestick. Okay, so this is how they are being formed on the chart. So when the opening is above the close, we term it as what? A bullish candlestick. Okay, we term it as what? A bullish candlestick. And for you to be able to identify a bearish candlestick, I said it doesn't matter the color. The color doesn't do anything. What is important? Usually, we normally use the colors for you to be able to explain it easily for someone who is naive or someone who doesn't have any knowledge about how the forex market works. You get it? So mostly the colors are not important. So when the close is what? Above, when the close is above the when the close is above the opening, we term it as what? A bearish candlestick. Okay, a bearish candlestick. So the colors doesn't matter in what? For you to identify whether it is a bullish candlestick or whether it is what? A bearish candlestick. So the colors doesn't matter. So this is the opening and this is the close. So the moment you see the candle as open above the close, it is called what? A bullish candlestick. So this is the high. Okay, this is the high and this is the low, and this is the low. You get it? This is the high and this is the low. So it's the same thing over here too. It's the same thing over here. We have the low and we have the high too over here. You get it? It's the same thing over here. So when the opening is above the close, we term it as what? A bullish candlestick. And when the close is above the opening, we term it as what? A bearish candlestick. So as I've been saying, the colors doesn't matter in what? Candlestick formation. The colors doesn't matter. What is important is for you to be able to know where the candle open and where the candle close. That's the most important thing in what? Candlestick formation. That's the most important thing. So the colors doesn't matter in candlestick information. The colors doesn't matter. Okay. So this is how the candles are formed. So if you can see on the chart, you can see it over here. So the green, so normally on most of the platforms, or most of what, when we are trying to set up our chart, we usually use the green to represent a bullish candlesticks, and we usually use the red to represent what, a bearish candlestick. And most of the times, some people to also use black to represent a bearish candlestick. Other people to also use what, white to represent what, a bullish candlesticks. But the colors doesn't matter, as as I'm repeating myself, the colors doesn't matter. What is important is what, where the candle open and where the candle close. That's the most important thing. So you need to understand this thing. So we are going to talk about the psychology behind candlestick. So the sizes of the candles usually gives you an information that is going to help you to predict the future movement of what price, especially when they formed on what, a key level in what, the market. The way the size of the candles are going to tell you an important, it's going to give you a clue on where what price is going to move next. You get it? So it's always important for you to understand the sizes of the candle. So if you see a big candle size like this, it gives you a clue of what the next candle is going to do. So if you have been overlooking these things, you need to pay critical attention to them. The sizes of the candle gives you an important information that is going to help you to speculate on where the exchange rate is going to head to. Okay, so if the exchange rate is going to head up, the candlestick is going to help you to what, determine where it is going to it's going to help you to make the right decision. You get it? If the candlestick is going to move down, the previous candlestick formation or the size is going to help you to what, determine exactly. Sometimes you can easily predict where the next candlestick is going to go, if you are what, good in what, analyzing the closure of the candle. You get it? So if you are good at analyzing the closure of the candle, you'll be able to predict where exactly price is going to head to. You get it? If not where exactly, I think like 99% you are going to be making the right decision in the forex market. So candlestick formation is very, very important in making decision in the forex market. Okay, so if you be able to make right decision, if you be able to make the wrong decision, if you understand how to read candles, okay, if you understand how to read candles, you'll be able to make the right decision in the forex market. I always say this market that you are seeing, the candle, these things that you are seeing over here, it looks like a simple thing, but it's a language itself that if you understand how to read this thing, I always say what, this is a language. Okay, this is a language. So if you understand how to read this thing, you'll be able to make a lot of money in the forex market or in the financial market, because all the financial markets are using all the financial market. If you be able to predict the markets rightly or what, wrongly, you have to understand how to read the candles. Okay, so if you are good in reading the candles, you are going to apply the same thing in all the financial market. When it comes to the crypto market, you are going to read candles. Even when it comes to the stock market, you are going to be reading the candles. When it comes to the futures, when it comes to even the commodities or the financial markets, you are going to read what, candles. So if you understand the forex market, it is going to be very easy when you transition to what, the other financial markets. It's going to be very, very simple and easy. So you need to understand, the most important thing is what, for you to master one financial market. When you are done with it and you transition to the other financial market, and things are going to be very simple and easy for you. Okay, so this is a language. You need to understand how to read the language. If you don't understand how to read this language, you are going to interpret it wrongly. And if you know what is going to cost you, if you are the wrong side of the market, it's going to cost you money. Okay, because in this game, money is what is used to play. So if you are making the wrong decision, you are going to lose money in the market. So always the most important thing is for you to acquire the knowledge, for you to get a skill set, for you to get the right information. If you get the right information, making money in the market is going to be very simple. So the size of the candlestick matters a lot. Okay, the size of the candlesticks matters a lot. So we are going to talk about the sizes of the candlestick. So in the forex market, in the forex market in the forex market, if you see a big candlestick, okay, if you see a big candlestick, it tells you that we are either having what, a buying pressure in the market or a selling pressure in the market based on the formation of the candle. You get it? Based on the formation of the candle. So if the opening is above the close, that means what, we are having what, selling pressure in the market. And if the close is below the opening, that means what, we are having what, buying pressure in the market. So this is what I'm trying to say, or this is what I'm simply trying to explain it to you. So if you see a big candle like this, if you see a big candle like this, okay, if you see a big candle like this, so usually or normally we use green candles to represent them. So if you see the opening, so this is the opening of the candle. So if the opening is above the close and you see a big candle like this, so this is the close and this is the opening. This is the opening. So this is simply what, depicting that we are having what, this is simply telling you that we are having what, we are having, when the close is above the opening, this means what, we are having selling pressure in the market. This is what, a bearish candle. Since the close, this is the opening, this is the close, so this is what, a bearish candle. I'm not using red. I've already explained it to you that the colors doesn't matter, but for the beginners, for you not to get confused, let me use red. So when you see a big candle like this, what it's trying to tell you is what, we are having what, selling pressure in the market. Okay, so selling pressure simply means what, we are having a lot of people, but you are having a lot of people selling this currency pair. So currency pair is simply what, the exchange rate. Okay, so when you are trying to compare the price value of two currencies, so this is simply telling you that what, we are having a lot of people selling this currency pair. Okay, if you see a candle like this, so this is going to tell you that the next candle is what, the probability that the next candle is going to continue selling is very high, because we normally use the previous candle to make decision what, in the forex market, or to speculate where the exchange rate is going to head to. So if you see a big candle like this, it is trying to tell you that the next candle is either going to what, continue bearish. Okay, but we are having different factors or different things that we usually what, take it into consideration when you are trying to make decision in the forex market. You get it? There are different things that you usually take it into consideration when you are trying to make decision in the forex market. Not only candles. By candles, normally we use candles in combination with other types of technical tools like the support and resistances, the Fibonacci levels, the trend lines, and those stuff. You don't use only candlesticks to make decision in the forex market, but most of the times we use it what, in combination with other technical tools. Okay, we don't use it alone. You don't use the technical you don't use the candlesticks alone to make decision in the forex market. We use it in combination with what, other technical tools, as I said, support and resistances, the trend line, the Fibonacci levels. Those things we use it in combination with candlesticks to make decision in the forex market. So mostly when you see a big candlestick like this, when you see a big candlestick which forms on a support, if you see it forming on a support, what is trying to tell you that what, when you see it forming on a resistance, what is trying to tell you that what, when this one forms on a resistance, the next candle is going to continue bearish. Okay, because this candle, the formation of this candle is telling you that we are having more sellers in the market. More people are what, selling this currency pair. So then the next candle is also going to be what, a bearish candle. Okay, so this is not just 100% accurate, but most of the times this is what happens in the market. So if you can see this one, you see as this big candle forms, the next candle continue what, bearish. You get it? The next candle continue bearish. So at this one form, the next candle continue bearish. At this one form. So the big candles, what? The big candles also gives you an information when you are trying to make decision in the forex market. So it's always important for you to understand the formation of candles. Okay, it's always important for you to understand the formation of candles. So if you see a big candlesticks, if it forms on a support or a resistance on a trend line, it is telling you that what the next candle is going to continue the move. So it's always important for you to understand the formation of candles. You get it? It's always important for you to understand the formation of candle. So as you've explained, this is telling you that you are having selling pressure in the market. That means what, more people are what, selling this currency pair, or more people are selling this exchange rate. Okay, more people are selling this currency pair. So the currency pair simply will what, the exchange rate. So when you are trying to compare the price value of two currencies, it's simply what, the exchange rate. So more people are buying, more people are selling this currency pair. And when you see a big bullish candle, when you see a big bullish candle like this, the psychology behind this formation, okay, the psychology behind the formation of this candle, the psychology behind the formation of this candle is what, we are having what, buying pressure in the market. Okay, this is what it's trying to tell you. We are having what, so this is the opening and this is the close, and this is the close. So when you see something of this sort, what is trying to tell you that what, we are having what, buying pressure in the market. Okay, that means what, more people are buying and selling this currency pair. So you have to take note of that. More people are buying and selling this currency pair. So most of the times when you see it forming on what, a support, it is trying to tell you that the next candle is going to continue the move. The next candle is going to continue the move, especially when it forms on a support like this. What it's trying to tell you is that the next candle, this, let's assume this is a support. Okay, let's assume this is a support. What the candle is, what this one is telling you, that what, when the candle close like this on a support, most of the time, so we're having different things that you take into consideration before you even take a buy. Let's take it what, at the surface. Most of the time when it forms on a support, the next candle is going to continue what, a buy. So this means what, more people are buying and selling this currency. When you see this one, the next candle is going to continue buying. Okay, so this is what it's trying to depict to you. So the sizes of the candle matters a lot in what, in trying to predict where the next move, or where, trying to predict the next move of the what, price. It's very, very important for you to what, understand the formation of candles. Okay, it's very, very important. So the wicks, so normally the highs, let me explain the highs and the lows. So the high, when you see the high like this, so when you see the high, what the high simply means what, during the session. Okay, so let's say maybe this is the monthly candle. Okay, so within the month, this is the highest point, this is the highest point price got to. Okay, so as people were buying and selling the exchange rate, this is the level, this is the price within the month that people what, this is the price within the month that people, the highest price people what, bought and sold this currency pair. Okay, so the high simply means what, the highest level, or the highest price level price got to before moving down. And this is what, and this low simply or represents what, the lowest level price got to within what, the session or within the month. Okay, based on the time frame that you are trading, you need to take note, based on the time frame, or what, based on what, the time frame or the session you are trading. So if this is the H4 time frame, the wicks, the highs and the lows, or the top or the bottom, simply means what, so normally this is what we call it, wicks or shadow. Okay, but normally I used to call it what, the wicks. Okay, so the high simply means what, the highest level price go to. So let's go to the chart and see. So if you are taking this candle, for instance, this is the H4 candle. Okay, so where are you going to identify, or where are you going to indicate the highs and the lows? So this is the high, this is the high, this is the high, and this is the low, and this is the low. You get it? So the high simply means what, the highest level, the highest level price go to. You get it? The highest level, as people are buying it, people were buying and selling, this is the highest, this is the highest level people bought. Or so this is a bullish candle, this is the highest level what, people bought to. You get it? This is the highest level people bought to. And when you are taking the when you talk about the lows, this is the lowest level. This is the lowest level people what bought to. You get it? This is the lowest level people bought to. So you need to understand the difference between the highs and the lows. So mostly when you go to your MetaTrader 5, you are going to see on your MetaTrader 5 platform or on your execution platform, you are going to see the highs and the lows. So the highs, you see prices for the highs and the lows. So the highs and the lows simply means what? The highest level, it's being represented as H and L. So the H represent the highest level price go to within the session, within based on the time frame you are trading. So if you are focusing on the H1, the highest level, so every time frame and its highest level, okay, every time frame and its highest level. So if you take the H1 time frame, if you take the H1 time frame, you are going to see the highs and the low. That means within the hour, okay, within the 1 hour candle, that is the highest level price go to. And if you take the H4 for instance, within the H4 formation of the candle, that is the highest level. Within the H4, that is the highest level price go to. You get it? And when you take the daily candle, the daily candles too is having the wicks, the highs and the lows. So the high represents what the highest level price go to, and when you take the lows, the lowest level within the day price go to. Okay, so this is the H4 candle. So when you are taking the H4 candle, this high represents within the formation of this H4 candle. So the H4 simply means within the day or within the for every 4 hour a candle is formed and a candle is closed. So within the 4 hour, this is the 5 o'clock candle. So within the so it started printing on what 5 o'clock a.m. So it's going to close around 9 o'clock. So within that interval or within that period, this is the highest level people bid. If people are like buying and selling, this is the highest level price go to. Okay, and this is the lowest level price go to. You get it? So this is the simple what definition of what the highs and lows. So when you move to the daily time frame, you are going to see the highs and lows over there. So this simply means when you take the daily candle, for instance, so this simply means what? We are having the highs and the lows. So within the day, okay, so the daily candle simply means what? For every day, a candle is formed and a candle is closed. So please take note. For every day, a candle is formed and a candle closed. Okay. So within this is 17th April candle. So on 17th April, this is the highest level price go to within the day. You get it? And this is the lowest level. Sorry, this is the highest level price go to within the day, and this is the lowest level price go to within the day. Okay, so you need to take note of that. So this is the daily candle, this is the highs, and this is the lows. So for every day, this is the lowest level price go to. For every day, for 17 September, this is the highest level price go to within the day. You get it? This is the highest level price go to within the day. This is the lowest level price go to on 17th April, September. And when you take 16th September, you are seeing the high, you are seeing the lows, and you are seeing the highs. So this means that this is the lowest level on 16th September. When people were buying and selling this currency, this is the lowest level price go to. You get it? This is the lowest level. So as I said, on your execution platform or the MetaTrader 4 or 5 platform, you are going to be seeing the highs and lows. So this is the lowest level price. This is the lowest level price go to, and this is the highest level price go to. Okay, so as people were buying and selling the currency, so before this bullish candle will form, it doesn't mean what within the day bullish buyers were taking control of the market this week. So you will get to exhaustion candles too. I will explain the meaning of exhaustion candles. So it doesn't mean buyers control the market fully within the day. That's not the case. By all means, what buyers or sellers too are going to take control. So the market is like a tag of war. Okay, so it's two things that you are doing in the forex market. You don't trade currency as a standalone. You trade currencies in pair. As you are buying one, you are selling one at the same time. So no matter what, there's no way buyers are going to, within the session that you are trading, buyers are going to take control of the market like fully. There's no way that thing is going to happen. Okay, by one way or the other, sellers too are going to take control. So that's why sometimes when you enter the market, those who are, or those who have executed before, those who have taken a trade before, you sometimes move the price, your profit to your P&L will move up and down. Sometimes you'll be in profit, sometimes it will come down. That's the meaning of what, how the forex market or how the financial market are trading, trying to trade the forex market works. Currencies are not traded as a standalone. If it is traded as a standalone, you would have seen one direction of the market most of the times. But since it is not traded as a standalone, we mostly see what, uh, a competition among the buyers and sellers. Sometimes buyers will take over the market, sometimes sellers will take over the market. But at the end of the day, one participant is going to take over the market. So that's how it usually works. Okay, that's why it usually works. One participant is going to take over. So when you see this candle, the way the candle has formed, since the what close is above the opening, that means what, so that means what, buyers are fully in control of the market. Okay, because the opening is what, the opening is below the what, the close. Buyers are fully in control of the market. So that's the simple definition of what, the candlestick information. So it's always important. So when you are trying to execute a trade, we mostly check how the candles are formed, the size of the candle, the size of the body of the candle, the size of the wick of the candle. It gives you a clue of the decision you're about to make. So we don't take it as just for the just the surface, like the candle has formed. Nah, we make decision based on the formation of how it is being formed. So it's always important for you to understand the sizes of the candles, the sizes of the wick. So this one that you are seeing is simply the shadow or the wick of the candle. Okay, and this one that you are seeing is the body of the candle. So we are going to be talking about those things. So I'm just trying to explain the meaning of the top, the high and the lows. Okay, so this is the within this 15, this is what 13 September candle. So this is the low. Okay, so they are all important. Okay, they are all important in making decision. The lows and the highs of the day is very, very important, or the session that you are trading, or the time frame that you are trading. The highs and the lows are very, very important. So that's why I'm trying to zoom it for you to get it clear. So this is the low. Okay, so within the day, this is the lowest level price got to. Okay, this is the lowest level price got to within the day. This is the low. Okay, this is the low. And when you come to the high, you can see some tiny wick over here. So this is also telling you that what, this is the high of the day. So that means within the day, as buyers and sellers were trying to compete among themselves, within the day, this is the highest level price. They try to push, buyers try to push price to that level. Okay, buyers try to push price to that level. Okay, so this, the candles that you are seeing is just demand and supply. Okay, just demand and supply. So if maybe the scarcity of currency, by all means prices are going to be high. Prices, their prices to get the currency is going to be very high. If maybe there was what, plenty supply of the same currency, that means what, prices are going to be low in. So it's just the basic economics of demand and supply. That's what you are seeing on the chart. That's what you are seeing on my screen. So it's simply the demand and supply. Okay, so it's a competition among buyers and sellers, a competition among buyers and sellers. So no matter what, buyers are going to push price at certain points. No matter what, sellers too are going to push price at certain points in time. So it's always important. So the highs and the lows I've already explained. So the body of the candle. So when you see the body of the candle, so the body of the candle simply means what, within the day, as the candle was about to form, when you see the opening, this is the first price, this is the first level, or this is the this is the first level price go to. Okay, that's the simple meaning of what, the opening. So the opening simply means what, the first level price go to. Okay, this is the opening. And this, the close simply means what, the last price go to within the day. Okay, so if time is going to permit us, I would have explained how candles are being formed. So it's just a bit. Okay, it's just a bit among buyers, just a bit like among people. Okay, just a bit among people. So if maybe at the spot market, this person agrees that I'm going to buy this currency, I'm going to buy this currency at this price within the day. maybe I'm going to buy currency at $1. The exchange rate among maybe the exchange rate, you see, with the exchange rate, people are buying and selling the currency pair. So maybe if I agree to buy this currency pair at maybe $1 within the day, someone to, since the day hasn't closed, someone to will come with their price. Maybe I'm going to buy it at $2. Someone to is going to decrease it to what, maybe $1.5. Someone, so it's just that before the day will end, this is what a depiction of what happens within the day. So candlestick what depicts the activities that happen within the day. So that's the simple explanation. I'm trying to make it very simple for a layman or just someone who is naive, someone who has not even heard about what this thing means. I'm trying to make it very simple for everyone to understand. That's why I'm trying to what use simple things for everyone, trying to give more explanation to how it works. So some people too are even trading. Some people have not even thought it twice to even go deep to how these things are formed. So I'm trying to make it very simple for everyone to what get the understanding of how this thing means. Okay. So as I said, candlesticks what gives you a clue of what the activities that happens within the day. So within the day, as people were buying and selling this currency pair, this is what the pound yen. As people were buying and selling, this is what the activities within the day. This is what happened. So that means within the day, price got to what 188.73, and this is what the highest level price got to 192.047. Okay, so if you are having £1, if you're having £1 as a start, if you're having £1, you'll be able. Sorry, if you're having £1, if you're having £1, you'll be able to get yourself 188.745. Okay, at the initial point, if you're having £1, before you'll be able to get £1, you need to bring in 188.745 what Japanese yen before you'll be able to get yourself £1. You get it? So within the day too, it got to some points that if you're having £1, you need to be able to bring 188.926 before you'll be able to get £1. Or maybe if you're having £1 and you want yen, you'll be getting 188.926. So this is activities that happens within the day. You get it? I hope I'm making sense. If you are getting it clear, if you are understanding everything that I'm saying over here, kindly type in your favorite, or kindly send in your favorite emoji. Kindly send in your favorite emoji. Let me know whether you are getting me. If you are getting whatever I'm saying, if it is clear, let me know. If it is not clear to, maybe I will know what to maybe send my information. If you are getting me, kindly send in your favorite emoji. If you are getting me, kindly send in your favorite. If I'm making sense, or I'm making sense to you, kindly send in your favorite emoji. If I'm making sense, kindly send in your favorite emoji. Let me know. Or you simply kindly type in one. If you can hear me, kindly type in one. If you can hear me, sorry, if you can get me clear, kindly type in one. Okay, I think some people are getting it. Kindly type in one if you can get me. If I'm making sense. Okay. So Samuel Rafi is getting it. Joseph Enum is getting it. All right. Okay. So I think some people are getting it. So that's the meaning of what the size of the candle. Okay, that's the meaning of the size of the candle. So the wicks, it simply means what within the day, this is the highest level price got to, and the low the low simply means what within the day, this is the lowest level price got to. So you have to see candlesticks as what an activities that happens within the day among that currency pair. That's the activities, or that's the price that maybe within the day, that's the various prices that people try to what exchange. You get it? That's the activities that happens within the day. So let's talk about the wick of the candle. Since our time is approaching, let's try to talk about the wicks of the candle. So the wicks of the candle simply means what? Okay, so as I said, the opening means what? The first level price got to, and the what the close simply means what the last level price got to. Okay, the last level price got to. The opening simply means what the first. So this is the opening as I've depicted it over here. So this is the candle. This is a candle. This is an example of a candle. So this is going to be the opening. This is going to be the opening. This is going to be the close. So the opening simply means what within the day. This is the level price got to, and the close simply means what within the day. This is the last point price got to within the day. You get it? So if you are taking the daily candle for an example, within the day, this is the lowest level price got. This is the what the first level price. This is the first price. This is the first level price got to. And when you take the close, this is what the last level price got to. The highs and the low simply means what the highest level price got to within the day. So price can be ranging within the day from this side to this side. But when it talks to the opening and the close, it is different. The opening and the close is different from what the highs and the low. So after that, I will be giving a chance for people to have to ask a question. So you kindly jot down your questions. After the session, I will ask you to give out your anything, give yeah, all your challenges. You can bring it out. I will answer them. Okay. So let's talk about the highs, and let's talk about the body when you are seeing a candle having a long wick. Okay, so that's the exhaustion candle. So you've talked about when a candle, so now you've understood that when you see a candlestick forming on what a major level, it can be a Fibonacci level, it can be a support level, it can be a resistance level, it can be a trend line level, it can be on a psychological level based on your understanding, based on the names that you've given to them. Okay, so if the candle has formed on what, if the candle has formed on a support level, a big candle has formed on a support level, what it's trying to tell you is that within the day, okay, within if you see a big candle forming a support level, it is giving you a clue that what the next candle is going to continue up. Okay, the next candle is going to continue up. That's the simple meaning of that. And if you see what a long candle forming on what a resistance, a bearish candle forming on a resistance level, what's the clue that it is giving to you is that what the next candle is going to continue down. Okay, but you need to always make sure they are forming on what a key level. The key level simply means what the various support and resistance level. You need to understand that when they are forming on a major support and resistance level. So if you see a big bullish candle forming on a support level, it is giving you a clue that the chances or the probability that what the next candle is going to continue to buy is very high. And if you see a long bearish candle with a long body, okay, the body is very important, not the wicks. Okay, so the wicks is not what you are factoring into consideration. The body of the candle. Okay, so this is the body of the candle. The body of the candle comprises of the opening and the close. In between the opening and the close is the body of the candle. So this one that you are seeing is the body of the candle. You get it? This is the body of the candle. The body of the candle exclude the wicks. Okay, this is not part. This is the shadow. Okay, this is the shadow of the candle. But when it talks about the opening, the body of the candle, this is the body of the candle. This is the body where in between the opening and the close is the body of the candle. So please kindly take notes. This is the body of the candle. In between the opening and the close is the body of the candle. You get it? In between the opening and the close is the body of the candle. So if you see a long body, if you see a long bullish candle, if you see a long body bullish candle which has formed on a support, it is giving you a clue that what the chances or the probability that the next candle is going to continue to buy is very high. And if you see a long bearish candle forming on a resistance level, what is trying to tell you what the chances or the probability that the next candle is going to continue to sell is very high. So please take note of that. Okay, please kindly take note of that. So when a candlestick, the wick of a candle or the shadow of a candle too is very, very important when it comes to making decision in the forex market. You get it? So sometimes you might be seeing a long bearish candle, or you might be seeing a long wick with a small body of a candle. So if you see a long if you see a long wick, okay, with a small body of a candle, it's trying to tell you that what this is what it's trying to tell you. So if the candle looks like this, if the opening of the body, if the opening of the candle, this is going to be the opening of the candle. This is the opening and this is the close. So this means what? It is telling you that what this we are having what buying pressure in the market. So this candle simply means what? This candle simply means what? We call it selling exhaustion candle. It is selling exhaustion candle in the sense that what? At the initial point or at the initial stage in the market, buyers were taking control of the market. Buyers were in control of the market. Okay, sellers were in control of the market. Sellers were controlling the sellers were having absolutely what control in the market. They were pushing price down. They were pushing price down. Within the day, all of a sudden, something popped up and buyers came in. Which buyers came in strongly. They pushed price up. They pushed price up. They pushed price up. Okay, and the price came to close at this level. So this is trying to tell you that what we are having, we are having what, uh, we are having what buying pressure in the market. Okay, this is sellers exhaustion candle. Sellers have lost control in the market. Okay, sellers have lost control. Sellers were pushing price down. Sellers were pushing price down, and all of a sudden, buyers came in and pushed price up. So this is telling you that what we are having what buying pressure in the market. This is the simple meaning of that. We are having buying pressure. This is the close of the candle. This means what? You're having buying pressure in the market. So when you see something of this sort, when you see them forming on what? A key level. So the key level that I'm trying to say or I'm trying to talk about is what? The key level can be support or a resistance. So especially when you see it forming on what? When you see it forming on a support level, what it's trying to tell you is that what we are having what the probability or the chances of the next candle continue buying is very high. So please take note. The chances or the probability of the next candle continue buying is very high when a candle has been depicted or has been formed on a support level like this. It gives you a clue or it gives you what a hint that the next candle, the chances of the next candle, the market or the chances of the market buying is going to be very high. So please take note of that. The chances of the next candle continue buying is very high. So this tells you that what this is seller's exhaustion candle. So please take note of that seller's exhaustion candle. What it simply means that what sellers have lost control in the market and buyers have taken over the market. Okay, so sellers were in control of the market. Sellers were in control of the market. They were pushing price down heavily. They were happily pushing price down. You don't know what happened. More people were buying. More people were selling this currency pair. More people were selling this currency pair. As I've said, the exchange rate is just a tug of war. Okay, buyers and sellers trying to what compete among themselves. So at this point, sellers were having absolutely what control in the market, pushing price down, and all of a sudden, buyers came in and what drove price up to this point. So this is where the opening of the candle starts. So the opening, as I've explained, the opening what is the first level, is the first price level that price what got to. Okay, that's the opening, and the close simply means what the last level price got to. Okay, is different from the highs and the low. The highs and the low simply means what the highest level price has gotten to within the session or within the day. Okay, let's say within the session. So the session can be what the various time frame, based on the various time frames. Okay, so based on the time frame, the highest level price got to. Maybe if you are focusing on the H4 time frame, at the H4 candle, this is the highest level price got. At the daily time frame, this is the highest level what sorry at the H4 candle, this is the highest level price got to. At the H4 candle, this is the highest level price got to. This is the lowest level price got to for the H4 candle based on the time frame you are focusing on. So please take note. So when you see candle like this forming on what, so usually, as I've been explaining, the names of the candle doesn't matter. You need to understand the psychology behind every formation of the candle. The name of the candles usually doesn't matter. So People trying to, if you read some of the technical analysis books, they have different names that they used to call it, but the names doesn't matter. Okay, what it is important for you to understand is what the psychology behind the formation of the candles. The names of the candles, it does not need for you to memorize hammer, pin bar, uh, the names doesn't matter. What is important is what the psychology behind the formation of every candle. So when you see something of this sort, when you see a depiction of a candle like this forming on a support, what is trying to tell you is that what sellers have lost control in the market. This is a seller's exertion candle. Buyers came in, drove price up. So what is trying to tell you that the next candle, the chances or the probability of the next candle continue buying is very high. This is the simple meaning. Okay, so there's no need for you to memorize the names of the candle. It is not necessary. Okay, it is not. You can memorize the names of the candles, but you can't explain it. What if someone asks, why is this candle called a hammer? Why is this candle called a engulfing candle? You can't give an explanation to that. And as a trader, you need to understand every decision that you are making. You need to be able to explain every decision to a naive person, someone who is what novice, someone who doesn't have any knowledge about how forex works. You need to be able to explain it well to those people. So if you understand how they are formed, it's going to help you to what make the right decision in the forex market. So as I said, if they formed on a support level, what it's trying to tell you is that what buyers are fully in control of the market. Okay, with a long wick like this, it is telling. So the size of the wick too sometimes is very important. Okay, sometimes you see what the body of the candle in between the wicks. So if you can measure the size, it can give you a clue of what where the next candle is going to head to, and you are going to, the chances or the probability of what you making the right decision is very high. So this is what called seller's exhaustion candle. Some people will call it pin bar or invented hammer or something. As I said, the names of the candle doesn't matter, but you need to understand how or why they are formed. Okay, and the next candle is going to be maybe buyer's exhaustion candle. So something like this. So when you see something of this sort, so when you see something of this sort, what it's trying to tell you is that when you see something of this sort, what it's trying to tell you is that what. So this is going to be the opening. This is going to be the opening, and this is going to be the close of the candle. This is going to be the close of the candle, and this is the high. This is the low. Sorry, this is going to be the high or the top, whatever name you are going to give it. This is the high, and this is going to be the low. This is the low. As I said, the names usually it doesn't matter to me. This is the what? The high. You get it? This is the high. So mostly or usually when this is the opening, this is the close. So if you are seeing long bearish candle like this forming on a resistance level, what is trying to tell you is that what what is trying to tell you is that what sellers were in control. Sorry, buyers were in control of the market. Buyers were driving price up. Buyers were driving price up, and all of a sudden, sellers came in and what drove price down. So this is called buyers exhaustion candle. Okay, buyers have lost control in the market based on the wick, based on the size of the wick. Okay, based on the size of the wick, buyers were totally or were fully in control of the market, pushing price back. Sellers were reluctant, where they were not having any control in the market, and all of a sudden sellers gained control, sellers gaining some power, started driving the price down. So sellers drove the price down and close it over here. So this is telling you that what we are having, what selling pressure in the market. So this is buyers exhaustion candle. Okay, buyers have lost control in the market, and now sellers have sellers are having control in the market. So when you see something of this sort, when you see a candle like this forming on what a resistance level, it is giving you a clue, or it is giving you a hint that the next candle is going to drove down. Okay, the next candle is going to push down. You get it? So you need to understand the formation of candles. Okay, you need to understand the formation of a candle. And the next candle, the next one too is going to be maybe if you see something like this. So when you see something like this, what is trying to tell you, so this is going to be the high, this is going to be the low, this is going to be, let's say if you are seeing something like this, what this candle is depicting, or what this candle is telling you, is that what this candle is telling you, that you're having indecision in the market. Indecision in the market in the sense that you see you're having equal wicks, the highs, the shadow up and the shadow down, you're having the same wicks. So what it's trying to tell you is that what it is trying to tell you is that what you're having indecision. Buyers and sellers are both having control in the market. Their powers are the same. Okay. So when something of this sort happens on a support level or resistance level, what is trying to tell you that indecision simply means what? It can move up, it can move down. Okay. Because buyers and sellers are what? Both having the same powers. They are both having the same powers because the wicks are the same. When you see the wicks to be the same and it forms on a support level or a resistance level, it's trying to tell you that what we are having indecision in the market. So when you are making a decision in such market, you need to be very, very careful. Okay, you need to be very, very careful because we are having indecision in the market. So it's very, very important for you to take note. Okay, it's very, very important. So mostly understanding the psychology is important, but you need to combine understanding the formation of candles, understanding the sizes of the candles is very, very important. But one thing is what you can't base, or you can't use only candlesticks to make decision in the market. You can't solely base on that to make decision in the market. So mostly they are used in combination with other technical tools. Okay, other technical tools like support and resistances, the trend lines, the Fibonacci levels, the psychological levels. Those terms, okay, they are used in combination with what candlesticks to make a decision in the forex market. So you can't conclude solely on what technical. You can't make a decision, or you can't what predict or speculate the market using only you're using solely the candlesticks. You are mostly going to make the wrong decision. So even though I've showed you the psychology behind those formation and those things, but as I've said, mostly when they form on a support or when they form on a resistance, it gives you a chance, or it gives you a clue or a hint that the next candle is either going to uh, continue with what the next candle, the previous candle closed with. So if the previous candle closed with the buying pressure, what is trying to tell you is that the next candle is what the next candle buying pressure is going to continue. When the candle closed with the selling pressure, what is trying to tell you that the chances or the probability that the next candle is going to continue selling is very high. So you need to take note of those things. But you are not going to base on that solely, or not. You are not going to make justify your this. You are not going to justify the market based on solely on the candlesticks. You need to use it in combination with other technical tools to make decisions. I hope I'm making sense. Okay, so you can drop in your questions. You can drop in your questions. If you have a question at this point, you can drop it. If you're having a question at this point, you can drop it. If you're having a question, you can drop it in the chat box. If you're having a question, you can drop it in the chat box. So those who said you have having a question, so anything that I've said, if you're having a question on anything that I've said, kindly drop your question in the chat box. If you have a question on anything that has been said over here, kindly drop your questions in the chat box. Kindly drop your questions in the chat box. Kindly drop your questions in the chat box. So you guys don't have any question. Everything is clear. Everything is clear to you. Kindly drop your questions in the chat box. Okay, so let me use this opportunity, since you guys are not having questions. Let me use this opportunity to talk about the upcoming program that is about what that you'll be having very soon. So with the program, we are going to be having 30 days boot camp. So with the 30 days boot camp, every evening we are going to be having live sessions. Okay, every evening for 30 days. So one thing I've realized, or one thing I've noticed, is that most people are confused about whatever I'm teaching. So one thing I'm going to do, and some people too sometimes will join late and they don't understand whatever it is going to go on. So one thing I've noticed, or one thing I want to be helping other people to be helped, understanding whatever I'm going to talk about or whatever I've been teaching, I'm going to start everything from scratch. So I'm going to start with what? The various platforms, okay? The various platforms that you are going to be using to trade the forex market. You are going to start everything afresh, okay? From the basis, from the overview of what forex is, everything to what the technical analysis side. So it's going to be continuous for 30 days, and I'm not sure after that 30 days you are still going to struggle to make decision in the forex or to be able to speculate the forex market. So you are going to be with me for 30 days, okay? You are going to be with me for 30 days. So I think with that one, if you don't get how to be able to analyze or speculate on the exchange rate, I think then maybe forex is not for you, because it's going to be very deep. It's going to be very deep. You are going to talk about everything that you are supposed to hear, or everything that you need to make the right decision in the forex market. So if you are ready, if you are still confused, if you are confused on whatever, how the forex market works, I think this is the best time for you, because the subsequent ones that I've been doing, this is the first time I'm starting this thing and I'm testing it out. If it works and I'm getting results from people, the prices are going not going to be the same, because this thing that I'm going to do is going to drain me. It's going to take a lot of what effort from me, because continuously for 30 days is going to take much effort from me. So if you have the chance, if you have the means, if you have the resource for you to join, I think it is best for you to join now, because if you don't join now, the subsequent ones, the prices are going to increase, okay? So this one is going to be affordable, but the subsequent ones is going to be very expensive. And sometimes it's what is even the chances of what me even doing it again. Sometimes it might happen I'm not going to be doing it again, okay? It might happen I'm not going to be doing it again. So if the chance or if the opportunity has been given, you need to take action. So if you are willing to join the 30 days boot camp, as I've given the silver, the early bird price is low, so you can make the early bird price. You can use the early bird price to what to you can leverage on the early bird price and make a decision, okay? Or you can make the payment through what using the early bird price. So if you join, the price is going to be lesser than what when the time is approaching. Okay, when the time is approaching, the price is going to increase. So this is the time for you to join. If you have the means, if you have the resource, I think this is the time for you to join. It's going to be intensive for 30 days. Okay, it's going to be very intensive for 30 days. I'm going to show you everything that I do, the decision for me to predict or speculate where the price is going to be doing. I hope you guys have been watching me live and you've been seeing how consistently I've been predicting the market and how I've been passing profits and other stuff. So if you want to make a decision, you need to make it as fast, because I need only 10 people to train. Okay, I need only 10 people. I don't want much people, because if the numbers are more, you can't track their performance. That's the thing, you can't track their performance. So I want to be able to track the performance of my students. Okay, if the people are many, I want only 10 people. Okay, and so far I think 2 people have paid and it's left with only 8 slots, and the time too is limited. So if you want to make decision after the 10 slots, I'm going to close it and you are going to start. Okay, so if you want to join, kindly make the decision now and join. Okay, okay. Someone is saying, but sometimes why do price do what abrupt movement and later come back to the zone before giving a refined entry? I'm not getting what, but sometimes why do price do abrupt movement and later come back to the zone before giving a refined entry? So as I'm saying, what I'm trying to say to you is that what the market is about is a tug of war. It's a competition among buyers and sellers. So you are not going to be getting a smooth movement of price. By all means, buyers are going to take over the market and sellers too will come in. Okay, so that's what you have to understand. Buyers are going to take over sometimes, and buyers. You need to understand the right. So with the forex, with the candlestick, for instance, with the current candlestick, for instance, we have what candlestick structure. So if the candle is trending, you need to understand where you are going to place your stop loss, that your stop loss is not going to get hit. So that when price is ranging, you have certain price level that price is not going to hit it. Okay, especially if you are using the daily time frame, for instance. If price start breaking the low, it means that what, candlestick has changed trend. Okay, so if you are placing your stop loss over here, you fully understand that before price will get to this level, it tells you that what, if price break the low of this one, it tells you that what, candlestick trend has changed. You get it? Candlestick trend has changed. So if you understand that price might be ranging at this point, before price might be doing some consolidation, before the actual price will move, you know where to place your stop loss. That even if those price is moving up and down, it will not get to this level. Okay, so no matter what, you are going to get some retracement, but you need to understand where you are going to place your stop loss, that you are not going to get hit. So no matter what, price is going to what, come to, when price is trending up, you see some sellers coming into the market to try to like take over the market. But if overall buyers are in control of the market, at long run you are going to see a bullish move in the market. So that's what you have to understand. So you need to understand where to place your stop loss, that when sellers, in case maybe the market is an uptrend, sellers won't be able to what, price won't be able to hit your market, because no matter what, sellers are going to take over some time at certain points in price movement. What if sellers exhaustion candle is a bearish color? Is it still an exhaustion candle? So you need to understand. So if maybe something like this, so you need to understand the formation, the weight. Okay, if you see something like this and it is still what, if you see something like this, okay, with a small bearish candle like this, it's still telling, even though we're having the close, we're having the opening and the close over here, it tells you that, or maybe this is what, just bearish candle. Okay, this is going to be the opening, and this is still going to be the close. This is going to be the close. So it's telling you that what, this is what, bearish candle. But with the how the candle has been formed, so what, buyers are in control of the market, even though the market, the close is what, about, the close is below the opening. But one thing you have to notice, that what, because of how they are being formed, okay, because of how they are being formed, still buyers are in control of the market, because you're having a long week, buyers took over the market. We're having a long week over here. It tells you that what, buyers are still in control of the market. So the colors even doesn't matter. How they are being formed is the important thing that you need to understand. So please, you said we shouldn't look for the colors, but the opening and the close. My question is, how will I know that this part is open? And so it's very simple with the ongoing candle. So if you are monitoring the market, even if you are not monitoring the market, so maybe if you are seeing just red candles like this, if you are seeing a red candles like this, if time would have permitted me, I would have showed you how they are being represented on the chart. But because of time, so that's why you have to join the 30 days boot camp. With the 30 days boot camp, you are going to be talking about this one even deeper than what you've talked about here. So join the 30 days boot camp and you are going to talk more about what I'm talking about here. So this is just the surface. We have a lot to talk about. So we are going to be dedicating a lot of time for this one. So this is the candles. Okay, this is the candles. So assume maybe you are seeing just red candles. So even if you are not available, okay, if maybe when you come to the market and the price is over here, if price is over here and it is moving like this, it tells you, or it gives you a clue that this is the opening and this is the close. And anytime the opening is below the close, it tells you that what, we are having what, this is what, a bullish candle, because this is the opening, this is the close. Okay, so even though you are seeing red candles, but where the market started, okay, where the market started, if it's supposed to be a bearish candle, you would have seen what, the opening will be here and the close will be going on here. Okay, so it doesn't matter how the colors is going to be, is being represented on the chart. You need to understand where it is opening and where it is closing. Okay, based on what the next candle is doing, based on how they are being formed. Okay, so this is the opening, this is the close. If the candle form like this, it should tell you that what this is a bullish candle. It tell you this is a bullish candle because this is the opening, this is the close. The next candle formed over here, opening, close, opening, close. So you need to understand the formation of the candles. That's the most important thing. The close and the opening is the most important thing when it comes to reading the candlestick, reading the charts. Any question again? Any question again? So anyone who wants to join, those who want to join the 30 days bootcamp, I'm dropping my WhatsApp line over here. You can chat me up and ask for more inquiries about how this is going to be done. Okay, you can chat me up on WhatsApp and ask me how the 30 days bootcamp is going to be like. It's going to be an intensive for 30 days. Okay, so you can chat me up and ask for more inquiries. So I think we are going to end over here. If you have any question, kindly chat me up. Thank you all for tuning in for today's webinar. I know you guys have gotten a lot of value, and what I'm doing over here, you are not going to get it anywhere. Someone dedicating time, sharing value to you like this, I'm not sure you are going to get it anywhere. So if you have not subscribed to the channel, kindly subscribe to the channel, give a like to the video, and see you tomorrow. So tomorrow our live session will continue, same time tomorrow. Okay, our live session is going to continue at the same time. So early in the morning from 5:30 to 6 a.m. to 9 a.m. The learning session, we are going to trade live together. So you can join. See you all tomorrow morning. Good night.